Welcome to Crypto Game, where people like you come to hear the truth about the current financial economy and how to benefit from it. In today's topic, we have crypto investor and co-founder of Real Vision, Raoul, giving his top 5 reasons Ethereum is about to explode in 2022. Stay tuned because later in this video, we give you 2 researched crypto coins you may want to consider adding to your portfolio to see a return on investment. The big question of this video is, what does crypto investor Raoul see in the near future of Ethereum that no one else does? We'll be giving his top 5 reasons and breaking down his strategies so that you can use it to your advantage.
5. Buy the rumor, sell the fact.
So, buy the rumor, sell the fact. Crypto's ETH's getting a little bit overbought. Probably corrects a little bit, goes again, probably goes into the ETH merge, and I think the narrative is buy the rumor, sell the fact. And what we'll get is like a cheeky 10% correction. Everyone's like, see, we're going to be able to buy it back at the lows, and it's going to rip everybody's heads off because the macro narrative is changing. If the macro narrative was still inflation going up, rates going up, then I would say, yeah, there's not much chance. Or M2 falling, the rate of change of M2. But that whole shift is starting to get priced by crypto. So I don't see how it goes down. I just don't see it. So I'm extremely bullish, as you can tell, and it's an uncomfortable place for me to be so bullish equities into a recession, but that's where I am. I'm very bullish bonds, and I'm extremely bullish crypto. I managed to catch the low pretty much to the day, and ETH's up over 100% in a month. It's crazy, but we barely started. Everybody's underweight. We've got this massive supply shock, demand shock, and complete shift to the market. So there will be volatility. It will suddenly see these air pockets are down 10, 20%, really sharp, and everyone's like, see, it's all going to fall apart. And then I think it rockets higher.
Buy the rumor, sell the fact is a highly misunderstood trading rule. If the rumor is bullish, only then you stand a better chance to win. It requires practice and agility to monitor and analyze the market information, but yields high dividends if you stick to the plan.
4. Real earnings versus nominal earnings.
And my argument with that is, I don't know real earnings versus nominal earnings. Not sure how that plays into it. And the last 2 times we had high inflation and growth went negative was 1990 and 1982, and the market didn't have the earnings leg lower. So some people say, yeah, but in 82 the PE was 7. Well, 1990 wasn't like that. So the market had been ripping higher for a decade. With the pause in 87. So I don't think it's necessary. I think it's observable that it happens, but not always necessary. So I don't fear it, is my point. Generally, it's not my base case. Even if we do re-rate earnings, I think the market just races the PE.
Real earnings are determined by the inflation rate and take into consideration the purchasing power of the amount paid as compensation. Nominal wages don't consider inflation and are solely based on the current government regulations. This brings us to our bonus tip and what we recommend you should consider as a good cryptocurrency investment. One crypto coin that shows the current constant upward growth curve at this moment is Wrapped Bitcoin. Launched in January 2019, Wrapped Bitcoin is a tokenized version of Bitcoin that runs on the Ethereum blockchain. It was at an all-time high of 162,188 just a year ago, and currently sits at 21,669 per token, with a steady rise in value. You can invest in this crypto coin tax-free by using an IRA loophole. Follow the link in the description below to learn how. Stay tuned for the next investment coin later in this video. Subscribe now because in each video, we give you crypto coins we researched so you don't have to.
3. Past versus present.
We have had energy prices in the past, energy crisis and supply crisis. So the ones, and I've talked about it frequently on Daily Briefing and elsewhere, 1947 to 1949 was a supply crisis because everybody came into the civilian labor force, demand shock. Supply shock was, guess what, nobody had been doing anything, so there was no supply. So we saw 20% inflation, it went negative, 18 months later, went back up again and then settled down. The other one was 1974, which was a Arab oil embargo, and that was a massive supply shock. Obviously, the economy went down the toilet and the equity market went down the toilet. The moment inflation turned around, equities ripped higher. So we've had the inflation tipping down. Then the other times where we had inflation, but not necessarily an energy crisis, are interesting. One was 1982, which is, Volcker, the hero kind of narrative that goes on. Well, when we raised interest rates to 18%, everyone's like, he crushed the markets like a brave man. Yeah, the equity market went down 27% and shot up like a rocket ship all the way till 1987. The next time we saw inflation behind that of 1982 was 1990. 1990, the ISM collapsed to 35. The Fed were cutting rates eventually, but what happened was the market went down 20% only. So we've got a recency bias going on here. The recency bias is 2001, 2008. Inflation is going to be driven by this commodity supply, ignoring demand. We've had examples in the past that are very clear to look at that seem to not be consistent with that. So there's the one analysis, the one only ever, was why inflation went up in 1977 through to 1982. Right? That's what's in everybody's head. You see, it's going to come back from the money printing. They're all going to pay the price. That was the glory days of gold and the glory days of the commodity investor. That whole thing is a narrative construct that was driven by demographics. It was never driven by some monetary inflation issue.
History tends to repeat itself or gives us clues for what's coming again. Raoul Pal believes the harder the market falls, the harder the rebound will be.
2. Rate of change.
So again, I go back to another argument to add to that is, okay, we had a massive demand shock in commodities, but no supply shock in the 2000s, going into 2008, because China came in, right? The biggest demand shock in our working lifetimes. Commodities ripped. I mean, they all doubled and tripled. What was inflation over that period of time? If I said all commodities are going to go up 300% from here, what's inflation? Everyone's going to go, it's going to be 15%. It's the end of the world. Gold is going to be at infinity. They've destroyed everything. The answer was about 2.5%. Because it's the rate of change that matters, and it's not just commodity prices.
While the short-term monetary policy is a result of central bank policy decisions, long-term interest rates are determined solely by market forces in a free economy. In other words, we as consumers should be very disciplined and more concerned with how our actions affect tomorrow and not today. Our wealth banks on the future, not the present. This brings us to our next bonus tip and what we recommend you should consider as a good cryptocurrency investment. Another crypto token that shows a constant upward growth curve at this moment is Dash. Launched in January 2014, Dash is an open source blockchain and cryptocurrency focused on offering a fast, cheap global payment network that is decentralized in nature. Dash seeks to improve upon Bitcoin by providing stronger privacy and faster transactions. It was at an all-time high of $268.42 just a year ago and currently sits at $50.08 per coin with a steady rise in value. You can also invest in this crypto coin tax-free by using an IRA loophole. Follow the link in the description below to learn how. Subscribe now because in each video, we give you crypto coins we researched so you don't have to.
1. Collapse of housing market.
So then we talk about rents, owner equivalent rents. They're slow and sticky, but the housing market's falling apart. And they're linked to mortgage rates. They have to be, right? Because most people have a mortgage, rent out the property. Mortgage rates are coming down, and if we're both right that bond yields are going to come down, the mortgage rates come down. So that stickiness is what plays out in 18 months' time when inflation is back to zero again, in my view. So I don't see that probability. I spent a long time thinking about this, and I wrote a big kind of rebuttal in GMI last month on this whole thing because I take it seriously because there's a lot of really good people I really respect with this view, and I just wanted to approach it and say, is this the most likely outcome or not? Without ever saying, it's never going to happen. And I just came to the conclusion from all of the work that I did, kind of hundreds of hours of this stuff, is like, no.
In today's interview, Raoul gave us this point of view in remaining calm during inflation and confident in Ethereum and Bitcoin. Buy the rumor, sell the fact. We'll see you in the next episode.